Hey guys, and welcome to the Working Money channel. So the crypto market has been moving up, guys, slowly but surely. We got a mix of green and red today. Bitcoin's down a little bit. We got Ethereum down a little bit. We got BNB coin down a little bit. XRP is up by 0.11, so it's up by a little bit. Not really too much movement in the crypto space. We really have not seen market cap move too much. It's sitting right now at about $1.43 trillion. 24-hour volume has not moved that much, 2.29% in the last 24 hours. Bitcoin dominance obviously still holding as well. Bitcoin has not moved away from altcoins and vice versa, so we're seeing that ratio really just kind of stick. And here's the visualization, pretty much an upward channel where we haven't really seen too much volatility in terms of large price swings. We've seen a consistent move for Bitcoin, and so it did breach $38,000, did go briefly above that $38,000 mark to about $38,400, and now we're seeing it trade at about $37,700. So right back down here below that initial price swing. As you guys probably remember, I did talk about that $38,000 price mark as being that ceiling for this price zone here for Bitcoin, and probably a bit of a psychological number there. We still have a couple of months. I do think, this trend looks very, very similar to a lot of these moves that we've seen in the past before they have come right back down again. So I do think that there is a retracement in the cards for Bitcoin. Personally, I don't think we're going to continue to see this continuing to move up. But you know what? Anything can happen. This is crypto, of course. We've got XRP price here. Nothing too exciting for XRP right now. We've got the XRP price trading at around 61 cents, well, almost 62.61987. So for all intents and purposes, 62 cents for an XRP. I mean, it is a long weekend right now. Trading on the regular stock exchange did halt in the afternoon on Saturday for the long weekend. But ultimately, guys, we've got positive numbers here for the S&P. Just going to bring up the S&P real quickly here. Retracing, trying to get up above this level here. So this is going to be the next test for the S&P 500 specifically. Bringing up the DJI, because this will also have an effect, I think, on the crypto market and crypto prices. If we see a loss in confidence in traditional stock markets, well, that could, in fact, take the price of Bitcoin down, probably for that retracement period. So this is the DJI, the Dow Jones. And let me just bring up the NASDAQ here. NASDAQ, a bit of a different picture. NASDAQ trending lower. So that's not a great sign for tech stocks. Nevertheless, this is just a snapshot. I mean, cryptocurrency still, as you guys can see, still in greed. So people are feeling very bullish, and I do wonder how much this is going to actually change once we do see that retracement over the next coming months. I do think we are going to have a bit of a downturn over the winter personally, and so I talk more about this at patreon.com/workingmoneychannel with my Patreon subscribers. By the way, for those who are signed up for the Patreon, does somebody want to give me a hand? I do want to start a live stream, but I kind of need to test out the technology first. I think I have to do it through YouTube, but it's going to be posted at patreon.com exclusively. Yes, I am planning on doing exclusive Q&As at patreon.com/workingmoneychannel to talk about the market, the $10,000 plus portfolio, etc., etc. BondCrypt here posting this now. Despite what we've been seeing, obviously, we are noticing that XRP holders are still hodling strong, guys. Over 1,900 XRPL wallets now hold 1 million plus XRP, while 28 wallets hold at least 500 million XRP. So we're seeing that number stay steady. Recent data from the XRP Rich List confirms that despite an observable decline, over 1,900 wallets on the XRP ledger still hold 1 million plus XRP, while 28 wallets hold more than 500 million XRP. Amid the sustained bearishness, XRP has witnessed a noticeable drop. However, data confirms that some investor categories have taken to accumulation when others are reducing their holdings. So people still, whether we are seeing the balances drop for transfers or for other reasons, maybe diversifying into other wallets, we are still seeing quite a large amount of active wallets here. So Rich List, it's rich-list.info. I don't have the website up here, but you guys can probably see that there. If you want to type that in, you can go and check out the Rich List data. So it's a community-driven XRPL-based resource, and it has confirmed this trend. The Crypto Basic called attention to similar data posted on September the 20th. Notably, at the time of the report, the number of XRPL wallets holding at least 1 million XRP stood at 1,994. So, we're going to see a difference based on the reflected prices of XRP. Of course, when we did see this pump based on the news, and again, guys, this is all just speculative at the moment. We are still at the beginning of this bull run, and this is going to get dwarfed as soon as we start seeing the bulls really kick it up a notch. So these are all speculative traders still, I am convinced. Even if it is 1 million XRP, guys, there are some big bags out there. That's the statistic on the numbers. If you guys want to go check out the rich list, again, it is rich-list.info. So I wanted to thank BondCrit for posting that. It's okay, though. I think all boats are going to rise very, very soon, and I really do think it's going to be dependent on that Bitcoin ETF. XRP drops here posting this, a flood of billions of dollars in the next 2 to 5 years. So think about this for a second. 2 years brings us to the end of 2025. Okay, that should be roughly at the height of the bull run, whether it's mid-25 or the end of 25. Not quite sure when in 2025 we're going to see that Bitcoin top. But guys, at this point in time, this is when they are predicting that huge inflows are going to be entering ETFs, Bitcoin ETFs, and by extension, I think the rest of the crypto market will benefit too. Listen to this.
It's hard to say. I would not at all be surprised if we see hundreds of millions of dollars on day one. A billion or more wouldn't shock me. But I think long term, I think we'll see $150 billion in the long run in these ETFs.
In the long run, 10 years, 5 years, like what's the long run?
I'd say 2 to 5 years.
Oh, wow. I think that's the highest estimate I've seen.
Let me tell you how I get to that number so you can help me decide how crazy I am. If you look at RIAs in this country, there are 37,000 RIA firms with about 300,000 advisors, managing collectively about $8 trillion in assets for clients. If 3/4 of those advisors are telling us that they are going to buy this ETF and that their allocation is going to be, call it 2%, 8 trillion times 75% times 2% gets you $150 billion.
Oh, okay. All right. But then, yeah, if it's the 1% that you recommend, then that would be 75 billion, which is more similar to the Galaxy projection of about 80 billion in the first 3 years.
Yeah. And so I think that we're going to find advisors end up doing more than 1%, even though that's what I recommend in my book, Galaxy making the same prediction, many others as well. The reason I think you're going to, as a matter of practice, find an average of more than one is that as a matter of practice, nobody's going to do less than one, right? If you're going to do it, you're going to do at least one, which means some are going to do 5. Not many, but some. And those who do only one are going to have clients say to them, why are we doing only one? That doesn't seem like a lot. Or if the price starts to rise, the clients are going to say, I want more. The whole thing of classically buying high, selling low, the big mistake investors always make, they always do it backwards. But as the price rises and their familiarity grows, their comfort level increases, they're going to want to have more than just 1% of their assets. I think it's going to shake out around 2 to 3% of assets among those who are doing it. And that's why I think we'll likely be closer to the 150 billion number than the 75 billion number. Either way, that's a massive number. Bitcoin's only got 500 billion right now. This is a huge inflow into the asset class, which is going to have a profound effect on its price.
And so when Bitcoin goes up, guys, it takes the rest of the crypto market with it. I liked that he outlined the math there. 150 billion in the next 2 to 5 years, and giving us the percentages of what, these classic hedge funds, these classic, investment firms are going to be doing for their clients. 2%, a fairly good amount. 1%, a lot of clients are going to be like, that's not enough. Some are going to do 5%. Anyway, great clip here from the Laura Shin podcast. Wanted to thank XRP Drops for posting that. And then there's the real world utility stacked on top of it. And so, one of the theories is, as I keep saying, the real world utility will kick in once we start seeing that liquidity in the market. That's what Ripple is really gunning for, right? Liquid markets. That's what we need. Poof, for real world utility for the XRP cryptocurrency. And here's a Berkeley presentation kind of outlining the same thing. If you listen to this, courtesy of ISO 20022, let's do it here on Twitter.
If you're interested in blockchain and you want to make money, forget about sending money back to your uncle in France. This is where you should be thinking. This is the size of the entire economy of the world right here, GDP. This is the notional principle of all derivatives, okay? These are all forwards, futures, and options, and these are all derivatives except interest rate swaps. This right here, interest rate swaps. Biggest universe that most of you have never heard of. Millions of lawyers, millions of traders, millions of accounts, all that can be put on the blockchain, okay? And all this clearing system and settlement system, which we took, Dodd-Frank is like this thick, this much of it has to do with clearing and settling of swaps. Okay, it's a nightmare, it's a mess, and we can take this whole system and simplify it with distributed ledgers.
Derivatives and swaps. I don't know if you guys remember this news. XRP is poised to take a part of the 1.2 quadrillion derivatives market when Ripple did an integration with the International Swaps and Derivatives Association when they were finally listed on the ISDA. So this was news from a few weeks ago now, but I mean, we already see the derivatives game starting, and this was an older presentation here talking about DLT technology specifically and all derivatives, the notional value of all derivatives, guys. This is where we're going to see true value being transferred. He even says, the cross-border stuff, he mentioned this at the beginning of the clip, that cross-border stuff, that is just the beginning, but that is going to be chump change compared to what is really coming down the pike. Anyway, wanted to thank ISO 20022, let's do it, for posting that. Now, we were getting some information about the root network the other day. Those securing the root network in the last cycle were awarded over 602,000 Vortex tokens, with the Vortex containing 362,000 XRP and 4.7 million root tokens. So somebody was asking here, Thomas Silkjar here, it says, excuse my ignorance, but the XRPL bridge account have only ever received 48,000 XRP. So he was noticing a discrepancy. How is the network distributing 360,000? Captain McDonald down here reiterating and giving us some transparency here just with regards to the root network. Now, this is the metaverse project that is now XRP integrated. Hey, he says, thanks for asking. We have had several iterations of bridging processes and accounts during the development of the network, especially during the pre-public launch phase. All our XRP tokens are backed one-to-one by XRPL, XRP, and our Vault accounts. So they have backed XRP to our XRP, which is their wrapped XRP token. We are consolidating these so that it's easier to track and more transparent. It's one of the reasons the Vortex can't be unwound right now. We'll do more of a formal report, but for now, all funds are safe, backed one-to-one by actual XRP. So the root network doing their due diligence and being completely transparent, that is exactly the kind of thing we want to see. We don't want to hear of any scams because, as soon as the narrative turns negative, what happens? Well, the price, even if it's not merited, the price does tend to go down because people do get worried. They don't want to see their investment go to zero. Not that it will go to zero, so they pull out prematurely. Not a great idea. So, it's great to see companies like this, the Root Network, just being upfront and, explaining it to us before the sleuths have to dig deeper. So, wanted to thank the Root Network, Thomas Silkjar, and Captain McDonald here, all for posting that. Jack the Rippler here, guys, bringing us some more breaking news. Ripple and Taiwan's Fubon Bank have selected UK digital assets consultancy CodeLab to provide the lending protocol technology for the central bank digital currency. So we heard about the Fubon connection a few weeks ago, but now the pilot is seeking to combine a simulated CBDC and tokenized real estate within the mortgage lending process as part of the regulator's three-rail approach. And if you guys didn't catch the video I did on the Hong Kong project running on Ripple Labs, CBDC pilot on the XRP Ledger, and wanting to tokenize real estate mortgages, I will link that up here, running in parallel with each other. Rail 1 involves establishing the technological and legal framework for CBDCs, while Rail 2 consists of industry pilots and correcting design and implementation issues. Depending on the progress of these two rails, the regulator intends for them to eventually merge, at which point it is expected to unveil a full timeline for final issuance. And so they're doing this with CodeLab, guys. CodeLab says its technology will enable the creation of ultra-flexible credit with brick-and-mortar real estate serving as collateral. So I guess they needed a third partner in there. The firm will also apply its BankView product to pilot with Fubon Bank acting as administrator and the HKMA as overseer. The consultancy claims to have previously experimented with two-tier indirect CBDC models where the central bank issues the digital currency, but its distribution and access are facilitated through intermediaries. So giving us some more information there based on this project, the Fubon Ripple project, with the country of Hong Kong, now including UK's Code Labs. So some interesting news there. Wanted to thank Jack the Rippler for posting that. More XRP Ledger news, guys, from Michael Branch. The XRP Ledger unveils exciting updates. For those of you guys interested in the tech, XRP Ledger's on pace for new enhancements with amendment Fix Reduced Offers version 1 now activated on the mainnet. So for those of you guys interested, I got some more information here about that. XRP Ledger's amendment process only allows protocol changes after 2 weeks of more than 80% validator support, a requirement that has been fulfilled by this amendment. And so here's the official announcement here from XRP Scan. The Fix Reduce Offers version 1 amendment now active on the XRP Ledger is expected to enhance order book efficiency. This update improves the rounding and reduced offers, which benefits XRPL users. Fix Reduce Offers version 1 adjusts rounding to prevent order books from being blocked by reduce offers, the exchange rate of which altered by rounding the amounts, or rather the remaining amounts there. So just a bit of an update with regards to some tweaks that have been done on the XRP Ledger. Conversely, Michael also posted this too with regards to more XRPL news. Node operators on the XRPL have a short time span to upgrade their nodes to the latest version. So we're getting some more news here from developers on the XRP Ledger. Node operators on the XRP Ledger have just a few hours to upgrade their software to a newer version that can support all the recent updates that have been made in recent times. As blockchain protocol upgrades are not uncommon to the XRPL, according to one user, Short the FOMO, the next upgrade, dubbed version 1.12.0, might see operators get blocked if they fail to comply with the upgrade. So, there's a lot going on right now. I feel like, all these developers are probably working overtime. I feel like there's a deadline of 1 to 2 years, when there is more XRP liquidity in the market. And I'm sure their hires up are saying, okay, we've got this amount of time to develop as much as we can because we really do want to go live once the market is flush with XRP and flush with, all kinds of cryptocurrencies when the prices are high, when it'll be very, very easy to trade, large amounts of crypto. So, we're getting a flurry of this, and I just feel like it's an indication of what we are to expect in the coming, I want to say 18 to 24 months. Just my opinion on that. Not entirely sure if it's going to transpire that way. There does seem to be a lot else going on. The crypto regs, for one. And I guess, you can only do so much piloting and so much testing, before you really start to use this in a real world setting. And we really do need the United States on board in order for this to really kind of get to its full potential. So we're seeing a lot of, new amendments here. We're seeing a lot of new developments here on the XRP Ledger, but all for the best, I think. So wanted to thank Michael Branch for posting those 2 articles. Guys, we're seeing Ripple slowly chip away at the old financial system, and they're about to replace it with something new. Brian Brooks, managing partner of Valor Capital, this is an older clip. He said this about cryptos replacing the US dollar, but I did think now more than ever, it's important to kind of go back to some of these clips and, try to understand what these guys were saying back then and how far we've come since. Here's a clip of Brian Brooks. Let me play you guys this clip.
So the point that I always try and tell people is, the biggest issue that I always try and focus on is cryptocurrencies are really not about currency. And the biggest misunderstanding of this whole discussion is the belief that if crypto is not doing a great job of replacing the US dollar, then crypto is failing in its mission. And what I think we'll talk about a little bit today is the idea that most of crypto is about replacing the centralized banking system with networks that allow user control versus bank CEO control. The crypto assets that have prices are more like internet stocks. It's more like you bet on Google if you think there's going to be high internet traffic, and you short Google if you think people are going to go back to the post office, right? But it's not that Ethereum or Ripple or anything else is trying to replace the US dollar. It's trying to replace a system of transmitting value. And we'll talk a lot more about that. So for me, the prices are not that relevant any more than Google's volatility is. And in the early days of Google, that was super volatile.
So it's about the system. Notice how he used Ethereum and Ripple XRP as those 2 examples. Now, remember though, DLT is everywhere, and these crypto companies want to make it ubiquitous. This is why they're playing nice with regulators. Another clip from that Berkeley presentation that I wanted to show you guys. DLT will lead the next wave of adoption by connecting everything. So this is right on point here from ISO 20022. Let's do it. Listen to this.
Net takeaway started off with this circle of innovation, and we walked through kind of what's now traditional fintech, which is only 10 years old. Okay, we walked through starting with Capital One all the way forward, digitization of checks. Briefly touched on blockchain. People think blockchain is about payments, okay? They think it's about potentially market provisioning. It's actually also about deposits and lending. In fact, it's going to be affecting every single part of this circle. Distributed ledger technologies, okay, which are not the same as blockchain, which is not the same as crypto, which is not the same as Bitcoin. Think distributed ledger.
Think distributed ledger, not the same. And notice how he says not the same as Bitcoin, not the same as blockchain. So not the same as cryptos even. Distributed ledger technology is the mechanism, thereby using cryptocurrencies like XRP. We are going to move everything as, he was mentioning, the same gentleman was mentioning that in this earlier video here, the derivatives value. Of course, we got Ripple integrating with ISDA. So we're seeing it, guys, come to fruition. Not only that, Grayscale has considered XRP a strong contender in cross-border payments. This one coming from Ian Binns on Twitter. Grayscale Investments' latest report has highlighted XRP as a formidable competitor to traditional cross-border payment systems like SWIFT, citing its ability to facilitate faster transactions at lower costs. The crypto sector framework, which evaluates several leading cryptocurrencies, places XRP with a 4% market cap share, ranking it second after Bitcoin in terms of market dominance. Well, we do know that it does have less market dominance, but guys, that could change very, very soon. And Grayscale is no small player. This comes amidst conversations about the investment firm potentially reinstating support for XRP. Let's not forget, Grayscale did remove XRP from their crypto basket back when Ripple got sued. So maybe now might be the time that they actually relist XRP, add it back to their portfolio. This speculation follows the GBTC Trust's anticipation conversion of an ETF. In the recent favorable ruling on July the 13th that determined XRP is not a security. So we still don't have any more news with regards to Grayscale. If they are going to be adding XRP in a new investment vehicle for their clients, they are sounding very bullish on XRP, and we know they had listed it before. Now that things have changed, guys, they could list it once again. I mean, it is going to be important for DLT technology, moving the financial system, integrating into derivatives. So, I mean, think about it. Do you think they want to miss out? Do you think their clients want to miss out on this big explosion in price? That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.